Very much, Amanda. Welcome, everyone. Thanks for taking some time this afternoon to come out and hear a little bit more about preparing for financing. Um, Today, I just want to chat a little bit about AWE and about some of the steps that you would have to go through to prepare that financial side for your loan application. This type of preparation could also be used for other banks, for investors, and any other sources of capital that you might be looking for. So, Alberta Women Entrepreneurs, we do have access to capital. Offer business advice, training, and a supportive community to help you start or scale your business. Today specifically, we're going to talk a little bit about the AWE, about the loans, financial projection worksheets, which is the meat and potatoes of the presentation. And as Amanda mentioned, we're going to have some time for questions at the end. So about AWE, we're a nonprofit organization. We are dedicated to enabling women to build successful businesses. We are one of the first organizations catered to supporting women entrepreneurs. And since 1995, believe it or not, 30 years ago, we've worked with over 100,000 emerging and high-growth female entrepreneurs. Our client success rate is more than double the national average for small businesses. And an amazing statistic that 75% of our clients remain in business after 5 years. Some of the programs and services that we offer are, yes, we do provide financing in the way of loans between $30,000 and $150,000. We offer business coaching and advising, so we have one-on-one tailored advising sessions. Also through our workshops, we do workshops and webinars, something like we have today on interesting topics that are pertinent to people in small business. We have our specialized programs where you're able to meet some amazing advisors that we have that are top of their field that come in and help teach our entrepreneurs. We have a program called Bold Leadership. Actually, the branding is going to be changing on that to Digital Edge because it's about how to digitalize your existing business. Strategic Edge, which is a business overview for experienced entrepreneurs. One new program that we're launching is called Bridge, and this is for people at any stage of business to go through step by step and make sure that they're prepared to meet their challenges and develop strategies. And then our next step to business program, which is our Indigenous learning program. You may have seen AWE through some of our events, like our celebration of achievement. We have a summit once a year and connect events throughout the year, both in Calgary and Edmonton. Now, one thing when we talk about AWE, and I just like to mention this because I do get asked this quite a bit, is that we do not provide grants, we do provide loans. And we'll get into the loans a little bit more, but definitely loans that are a little bit focused differently or different to qualify for than what you would apply for at a bank. We have the newsletter, which you can sign up for on our website. We do have an amazing grant web page on our website, which talks about some of the opportunities through the Canada Small Business Financing, through Fundica, Hello Pocketed, and we have a lot of different sites that you can go to check out grants for your business. When it comes to loans, like I mentioned, we do have loans between 30 and 150,000. They are for market-ready startups, for business expansion projects, and even for business purchases. It is focused towards female-owned businesses, so the woman must be more than 51% owner and based in Alberta. We must meet AWE's requirements for credit, score, equity, and security. Those are all listed on our webpage, and you must be a permanent resident of Canada. Now, some of the things that AWE loans can be used for are a little bit different than perhaps what the banks would be able to fund, but we can help with business expansion projects or business purchases for leasehold improvements. So, building out that leased space that you have, we will help purchase equipment. Operating capital, sometimes we can help out with like a couple months rent, wages, those types of operating expenses. We can fund advertising and marketing and also the purchase of an inventory, which are definitely a couple things that the bank wouldn't fund directly. What we can't fund would be owner salary, and that's understandable. And we give you a loan and then you pay yourself and then that's it. Existing debt. So if you do have debts with other financial organizations, BDC, credit cards, that kind of thing, we can't actually pay those down for you. Um, Franchise fees are something that we don't cover. However, there are places that do. So if you're not sure, I can certainly direct you to some of our partners that will fund franchise fees. If you were going to purchase land for resale or houses, such as like flipping houses, this kind of thing, we don't really get into that at all. Now, the intangible goodwill is a part of if you were purchasing an existing business, sometimes you're buying up their book of business, their customer list, their business name, that type of thing. Again, that's not something that we can focus directly, but we can work with our partners to help you find financing for that. Research and develop project, research and development projects are better funded through organizations like Alberta Innovates and so on. For us, the business must be market ready and ready to start being financially viable right away. And we also don't fund purchase of stocks or shares in other businesses or that kind of thing. Now, like I mentioned, we're going to get down into the meat and potatoes of the presentation today on creating your financial projections. Financial projections are for if you want to move forward and expand your business, take on a new project, or ready to start a new business. This is the crunching the numbers part. We want to make sure that it makes sense, that there'll be enough money coming in to pay your bills and keep moving forward. So there's a couple of concepts that would be important to understand as we go forward. And it's the difference between cash flow and profit or loss. So cash flow, just think of it, it's like the actual cash coming in and going out of your business or your bank accounts. So it's the checks you're depositing, it's the bills you're paying, it's the actual cash coming in and out. Profit and loss is determines how much money or if your business is profitable or losing money. For example, if you should happen to invoice a client, and you don't get paid for 3 months, yes, you made a profit this month, but the actual cash flow isn't coming into your bank account for 3 months, so you can't use that money to pay your bills. So I hope that kind of helps you understand a little bit about the difference between the two. And we're going to look at those as we move forward and drill down into our financial projections. Now, on our website, we do have a template that there's about 5 or 6 pages on the tabs on the template to help you move through the process of getting all the information down that you need. We have set it up so that there's a lot of formulas built in. So if you use those formulas and let them use their magic and don't type over them or erase them, it really helps you carry information from the first page right through to the last. So this is our first page, our first tab, and we call it the source and use of funds. So for an example here, I've used one of our previous clients opened up a sort of beauty salon, and she wanted to borrow some funds to help her get going with that. So this very first page, we're kind of asking what is the source of the funding that you're going to use to fund this project, and what will be the use of the funds? What exactly are you going to use it on? So in this particular case, She said this project is going to be a $150,000 project, and you can see that at the bottom of that second column there. So from that, she's broken down what's all going to add up to that 150,000. And then in the next columns, 3 and 4, she's listed there where the money is going to come from, so the source of funds. So in this case, for construction and signage, the loan that she's asking for from AWE, $95,000 of it will be going towards construction and signage. In her personal contribution, she's going to fund her has already funded some of her general expansion costs in the tune of 15,600. And then we just work our way down. Part of the loan, she's looking for another 10,000 for furniture. She's put in 5,000 for equipment, and on and on. So at the end, you can see that the total cost of the items and the total funding listed also adds up to $150,000 on the far right-hand side of the page. Um, the one thing she's included here in the very bottom of the second column is working capital. So from the money that she's putting in herself, which she said is 30,600, she's put in there after she buys everything, she's going to be able to have 14,400 to start her business off in the bank account per se that she can use to pay some of her bills as she gets moving through her first days of her business. So this is the next section, and this is called, we've called it year one cash flow projections. We're going to project out 2 years. So we're saying if this new project that I'm adding on to my existing business, or this new market ready business that I'm about to ask for funding for, has gets this money, gets this funding, opens the doors, what are my revenue or my cash in and cash out going to look like? So you can kind of think it a little bit like a household budget. So the sales coming in would be like the paychecks, and then the expenses going out would be like the bills of the household. And so the equipment purchases, so the first column, opening position, is pulled in from our last spreadsheet by formulas, and we can see that there's the 45,000 she's putting in, the 105,000 that she'll be getting from her loan, and her total cash in before she opens her business, and that's what opening position is, will be 150,000. And then there's the other miscellaneous expenses that she talked about, her equipment, leasehold, inventory, that kind of thing. So at the bottom, she's paid out 135 on purchases, and you can see she's showing her cash balance as 14.4, which pulled through from the previous spreadsheet. So when we look at months 1 to 12, you can see her cash sales come in and out. They fluctuate a little bit. This business, she's expected that, she's going to have busier times such as grad season, wedding season, Christmas time, when people are looking for beauty services. And she's decided that since she's a new business, that she has an extra room. She's going to rent that room out to another person in the beauty business that might complement hers, and she's going to collect a little bit of rent there to help her get going. And then perhaps in year two, when she needs that room because she's got lots of business, she may decide to not rent that room anymore. But you can see here now that she's um, and then there's a little bit of product sales as well that she's included. So it's totally fun to break down your sales. It really helps you to kind of figure out, what your sales might be like. So think of seasonality, like we just talked about. Think about things like how it's going to take if it's a new project, a new location, it's going to take a while to build up your clientele so you don't how many hours in the day are you going to be open? How many employees are you going to have? So that would be your capacity, right? The max that you could a max customers that could take in the ideal world, and then pare it back a little bit from that. It's definitely better to start off being realistic than being over optimistic, because then if you do better, then great. But if you do worse, then you might end up scrambling a little bit when rent time comes around or payroll time comes around. So as you can see, we've listed month by month, accounting, advertising, bank charges, wages, that type of thing, and on through the 12 months. Now, at the very bottom is what we were talking about earlier about the cash flow. So she started with 14.4, and it looks like she had a little extra cash coming in month one, so her bank account went up, right? But then, so that's what gets carried forward to month two, but you can see she maybe lost a little money in month two, so her bank account went down. And this isn't the actual bank account, but I'm just using that term to sort of let you know about, explain or have you understand how the cash flow works. So that's why it's really great to have this cash flow worked out in advance so that if you know that maybe you won't be making as much money during your slow times or anticipate that you won't, you'll have a little bit of money set aside so that you can still pay your bills and wait till times, kind of pick up in the next couple of months. So the next one will be year two. Now you can see in year two, in the opening position, there's nothing because the business opened a year ago. So we're not going to include anything there. The only thing that carries through is our opening cash balance from year one. So that's the cash flow that we have left moving into year two. So in year two, you might be thinking about maybe I will take over that second room. Maybe I will hire more staff, which will increase my salaries, but it might increase my sales. Maybe I want to purchase some additional equipment that I'll have, or lease some equipment, so my lease payments will go up, but then hopefully my sales will go up as well. So these are the types of things you're thinking about in year two, about growing your business, and can I afford it? I know I get a lot of questions about how, oh, when will I know when I can afford to hire somebody? Because it's just me doing it all. And I'd be afraid to take somebody on in case I couldn't afford to pay them, this kind of thing. But having a really good idea on your cash flow is going to be a really great way to figure that out. Now, as you get rolling, like this is now going to be for the bank or for AWE financing or whatever. But as you get going, then you can start comparing your actuals to your estimated, and then you can see, oh, gee, I was way off. Maybe I need to change the last 6 months of the year or year two because I can see that this is going way different than I thought, or I had to pivot and offer a different service, or I had to hire staff sooner than I thought. So definitely comparing your projected cash flow to your actual cash flow becomes really important as you get rolling in your business and in your projections. If you're handing your books over to the bookkeeper once a year in April to do your taxes, by then you're already a year and a quarter in business and you haven't seen how really your business is doing. So that's the other important thing is really keep on top of that. Maybe do your books monthly or quarterly and really take a look at them and make sure that things are going the way that you think they are. Now, with regards to our cash flow, some of those numbers are going to flow into our income and expense statement, or our income statement, profit and loss, are some of the other names that are used for this. So when we think about income statement, this is for a period of time. So you can get an income statement for the month, for the quarter, for the year. Those are kind of the common ones where you add up all what your sales were, what your expenses are for the period, and you can figure out, well, now, was my business profitable? Previously, we saw that she still had money in the bank, but after she pays all her bills and everything, um, is she profitable? So in this particular case, um, she shows her sales and all her expenses. And in the first year, she, made a little bit of money. She made just under $4,000. Um, Certain types of businesses, like product-driven businesses, you would want to include amount in the cost of goods sold section. So that doesn't apply to all businesses, but we've highlighted it in yellow here. It doesn't pull through from the previous spreadsheets, but if you are purchasing product to sell, you'll want to know, well, if I pay $5 for the product and I sell it for $10, I also but I pay $5 plus I also have shipping and fees and so on that go along with it. That all goes into the cost of goods sold section. It's not fair to say, well, I'm selling this at $10 each. Woohoo, I'm making lots of money. It's good to know, okay, I paid this for it and I'm selling it for this. So what did it cost me? So think of cost of goods sold different from operating expenses. And if your sales go up, your cost of goods will go up. If your sales go down, your cost of goods will go down because you're not selling as many or you're not purchasing as much. About operating expenses are those things that happen pretty much every month. Your wages, your insurance, your rent, that kind of thing. So here it's pulled through our income and expenses for 2 years. The year end is, or the year, I guess the first year, the year ended year one, just under 4,000, but then the next year, just under 30,000. So you can see that she's making steady growth there, and that's important as you go forward. Of course, we know if it's a new venture, it's going to take a little while before you become profitable. But very good for you to know where you're at. And then when we're sort of analyzing where we want to go with funding and financing and helping you to know if that makes sense right now, it's good to know these numbers. So the final income or the final financial statement that we're going to look at is the balance sheet. Now, it's kind of tricky to figure out what your balance sheet when you're a brand new business. When you're an existing business, you will already maybe have a balance sheet that shows a balance sheet. What it shows is your your what you own and what you owe, pretty much, right? So we're going to take our financial projections. We're going to know kind of what our revenue and expenses and so on are going to be. I mean, we know what our assets, what we purchased maybe with our loan, this type of thing. So we're going to gather up all this information and we're going to put it into our balance sheet. And I'm going to just move to the balance sheet there. So this is an example for the same business. And a lot of these numbers, again, pull through from the numbers that we've already entered in. And you can see here that there's those cash balances that pulled through from the cash flow statements. Um, Prepaid expenses, that in this case, it was her security deposit. That's going to continue uh, forward and forward until we finally pay it off when we move out. And the inventory, she showed that she purchased 10,000 at the beginning. Now that's going to fluctuate and go up and down over time, but generally you make the assumption that I do always want to keep my inventory at around that $10,000 mark. So that's my current asset section. Current assets are assets that you probably will fluctuate and move forward and change during the year. Your fixed assets are more long-term. So in here, we've pulled through her signage and equipment that she talked about from the very beginning, and also the leasehold improvements on the property. Now, when you have an accountant doing your year end, they'll probably depreciate these with a specific calculation, which will show up as an expense in your, and it will also reduce the amount of them in your balance sheet. But for the purposes of a projection, we don't actually include those. Now, like I'm saying, if you're an existing business and you have a balance that you're carrying forward of your accumulated depreciation and so on. You can certainly show it in here. But again, that's why we kind of put it into yellow because we know that it may or it may not, you may or may not have that information. So the total assets there are shown in that column for each year. So that's the total of what the business owns. So then we're going to look at what the business owes. So in this particular case, she borrowed 105,000, I think it was, from AWE. So if we just divide that by 5, because it's a 5-year term on that loan, and then she's going to be paying back $21,000 of the principal every year, and then in 5 years it'll be paid. Now, one thing that we do offer is that we offer a 6-month interest only period, if it makes sense, where you only pay interest for 6 months, not the principal. And that's what she decided to do. So she's only shown 6 months worth of principal payback here because she decided to do interest only for the first month. Then we look at her long-term liabilities. There's the shareholder loan, some of the money that she's invested back into the business, and maybe she hopes that she's going to get paid back over time. And then we're going to show our AWE loan, which was 105, and then each year reducing and reducing by the amount of the principal that has been paid down. The retained earnings are under the owner's equity section are the amount of profit that or loss that the business made. So if you remember on her profit and loss statement, she showed that she made 39.68 in the first year. So that ends up rolling back into the business and be considered retained earnings, and that adds up year over year, and all the money that's left in the business gets recorded in the retained earnings section. Now, in a perfect world, then your total assets would equal your total liabilities and owner's equity, which you can see in this particular example, it does. It's pretty tricky with a projected balance sheet. As long as you give it a good go, it doesn't matter if it balances or not. Sometimes people use that shareholder's loan amount to help balance out a projected balance sheet, which is kind of what I did there. But yeah, don't lose a ton of sleep over it if it doesn't balance. And we can look at it together and make sure it makes sense when you're ready to go, we're going through your loan application. Now, one thing I did want to mention, and I know we're stepping outside the projections a little bit, but if you're having trouble coming up with, I don't know what the sales would be for my type of business or this type of expansion, there's a place you can go. It's Small Business Financial Performance Data. It's Government of Canada, and they have, um, surveyed small business across the country regularly to see how they're doing based on their size, based on their industry that they're in, and that kind of thing. So you can go to this. The link, the title on this page is the link, or you can just Google Small Business Financial Performance Data, and it will come up for you. And go in there and try to maybe run a report for yourself. Now, with anything like this, it's not going to, if you have a slightly niche business or something that's a little different, just kind of try to pin down the industry at least. Like if you're in travel and tourism, or if you're, in health and wellness or this type of thing. And usually you can kind of get an idea there. No, because I'll say banks and AWE, if we get someone that has come up with their projections, and maybe we think that they look a bit like really optimistic, or maybe not realistic in some way, we'll go to this financial performance data ourselves and look it up, and then say, okay, well, here's what the government of Canada says that most businesses in your industry are making for like sort of in the small size. And we just want to know, and we'll say, well, hey, how did you actually come up with those numbers, and let's work on that together. So when you're doing those projections, take a look in there maybe and see, especially if you're having trouble figuring out what your sales might be in that first and second year, and see what the government is saying on that. And one other thing that the banks and that we look at are some financial ratios. So when you're doing your projections or you're looking at your actual financials, it's really great to be able to make a few calculations to see, if I go to the bank with these numbers, or I go to AWE with these numbers, where will I fit within these ratios? Now, they don't all have to be perfect. I mean, if you had one weak one or one, borderline, we would like kind of delve in and figure out what the situation was. It's not a deal breaker, but you know what? If, knowledge is power. So if you know that one of these ratios is not quite there, you can maybe look into how can I improve that? But then you can also go into the banker and say, hey, I know my gross profit margin is not very good right now, but I'm looking to um, get um, um, get my direct cost down. I'm going to purchase from in more in bulk to get my cheaper price, things like that. So there's, like I say, there's a few there. The one we really look at, debt service coverage ratio. So it's like, can you afford to make the payments, right? Which makes sense. So if your net operating income divided by how much it's going to cost for your monthly payments for the year is below one, it means that, you're not going to be able to cover the debt right now. And so we have to definitely look at that. And you too, maybe we'll help you get to that point where you can, but definitely worth your while to say, well, should I get a loan right now? Oh, I'll make that calculation and see if I can afford it. So the other ones are there too. The gross profit margin, the current ratio, and the debt to equity is another important one. Do I have way more debts than I have equity in the business? Because if I do, then again, there's your business is relying a ton on debt, and and there's not really enough that you've put in there yourself, and so then again, like lenders would kind of come back to you and say, hey, like, I think you've already got enough debt. Is there any way we could help you maybe invest yourself back into the business, something like that? So that's a little bit about the ratios there. Like I say, if you have any questions, we can chat about it at the end here. I think I saw some questions in the chat just about resources and where the templates are and everything. We do have like a resources section in our loans on our loans page where you can find you can find the financial projections template that we're using, the other checklists and guides. There's checklists for business expansions and business startups, all kinds of things there for you to take a look at. Now, one thing I did want to mention is that we do have the business plan guide. However, if you're looking for an actual really interactive template that can be really helpful when you're putting a business plan together, our partner businesslink.ca has a great template there that can really help you walk your way through your business plan. And they even have mentors and advisors there that can help you that 100% specialize in business plans that they can, kind of help you if you get stuck on anything as you go through. So feel free to check that one out. We work closely with Business Plan, and they've really gone above and beyond on that business plan template.